Welcome to TradeTheNBI.com. This is John. This report is for the 21st. Welcome to autumn. And what an auspicious day to do it. Quadruple witching hour or day, where all the options, futures, and indexes close and roll over, and they're doing a major adjustment to the value of how the NASDAQ and that is computed. So it's going to be an interesting one. We'll see what it does volatility-wise. It could be a lot to do about nothing. Continuation of what we saw where we were in the week period and price really didn't move lower. I mean, it stayed fully supported on the 76 as well as within the ABMs, and anytime you're above the ABM yellow was clear long all the way to the highs. We were also in gold trend rising right here, and then started back at the basing. We talked about that with the steel crossing, let you know. And getting close to positive extremes on this move. If you're looking at these little P2, P3s, this, well, I could show you on the 5K chart here. Let me pull up my other one that I use. All that's measuring is the relationship of pivots. Like a P2 is one where you have a pivot that dipped below negative 13.5 and then a higher red pivot that takes place right afterwards and gives you the same buy signal. Usually just because it's a divergence where you have a higher reading. The P3s just happen to be when it's between -7 and higher. So in this case, this pivot points to this one. But interesting thing is that you still have to have a normal buy signal in order for it to be active. So in this case, there's no buy signal there, but in this P3, it comes a little bit later on. You do get the steel snake and also cyan below red, which is helpful. And then we ended up with a series of them right before this breakout, right here, that did produce the dips below the orange and the steel rising, and boom, it was just a takeoff from there. I can enlarge it from here just to make it easier to see, and voila. So you can see how that corresponds. And that's going to be an effective approach to avoiding some of the minor signals that sometimes pop up on the Diocon paint bar. It eliminates a lot of the fill. And looking at the NASDAQ, you can see not busting out to new highs yet. Still has to get back to its original ones. We saw that it was lagging before. And that's okay. It's going to get... what we talked about, though, is that the relative gain is pretty close to what we're seeing from the S&P. Is just a lag differential, and it's a mean reversion. So here's the euro, poking up to the high end of the Morganacci lines right here. It's been in a steady climb. As oil rises and there's talk of interest rate rise, it's going to be an interesting one because I don't see how the euro is going to be able to keep up with that. Of course, they think that with tariffs and you really don't see the growth out of the EU. So this is really bolstering the U.S. market as well. And this part of this big move corresponds exactly to the big rise. I mean, everyone's going to claim it's jobless numbers and things like that, but those relationships between earnings and that do make a difference. And TLT, of course, this has reached a base point here, but it still has room to drop quite a bit, in fact. And oil, it's at the new highs, fine breakout. It's come back a little bit into it, and that's going to continue like that. This is still quite outside the normal range for what you would expect. It just means that demand is really robust because there's plenty of supply capability, but how much of it you can actually refine in that is a different issue. Gold, again, not breaking out yet, and it should. There's plenty of inflation and everything like that to suggest that, in fact, it's necessary. So intraday, okay, we can go back to the gold right at the 50. This was a tough one, but it produced a buy signal right before the little pop there. Even in the beginning hours, traded kind of flat. A lot of positive extremes for coming back to fill. That's going to create a whole new level. In fact, we can just go like this, add a new parallel, and write it all. Well, those are already filled, so it's this one that starts right over here. right around 29.15 will be the a retrace portion. A lot of these mid ones got filled in between, and it's an interesting one because I wanted to point out a couple of these special circumstances so that you get an idea of, in this broad context, some people just want to think about shorting anytime they see the positive extreme. Well, you got to have a justification for that. And like here, you would think, okay, this is exactly what he talks about with the short snake. No, because you didn't have the green crossing, and typically you would want the green crossing where it's crossing below red. So in this particular case, yes, it does it. And sure enough, look what happened. So you might say, okay, well, that's not a huge move. No, but it filled in the positive extreme. So if your expectation is just for a little bit of light action, fine. If you were seeing a significant breakdown in both the DOC or the shakeout, then fine. Now, in my book, anytime you get over plus 25 here with your magenta and that, you typically want to wait until you're below the 15 to have any idea that you're going to get a significant. Now, sure, you can get really fast breakdowns that will dip below that quickly and trails it a little bit in that sense, but that's usually a pretty good guideline to avoid getting caught in major uptrends when looking for short. So in this particular case where you end up having it moving below and you end up with your beautiful short snake again, you see that green coming straight down across at the same time the steel's doing it, and it produces pretty immediate results. In fact, this one came all the way down to here, which produced a beautiful little green dot just at the time of a closing of the snake mouth, and that caused to bounce right back up and new highs. And so, likewise, again, even in this one, even if you were like, okay, I'm not sure that that's going to do it, you could even wait one more bar to get full confirmation of this one coming across. The better point with these, when they start to get here, is you can begin to look for lower shakeouts and higher highs. In this particular case, once you get down to these magenta and start a new run, you've got to reset. This one was particularly the most attractive because you had the beautiful high here, you had higher highs, lower shakeout, and then you get your signal, and that actually produced as most significant you were going to get. And then there's plenty of buys with all these. Every time you're dipping below cyan, below red, it's pretty clean as far as being able to do a long setup from those. And again, likewise situation, same with the peaks. You can wait for lower shakeout, but when you're talking about highs like this where you don't have a huge expectation for moves lower, I'm usually not afraid to take those in between. But I do like to look for the base moves that then produce situations like this where you get a clear cyan under red, you've got no movement, and then look at the breakout that created from there. So very nice. And I think in this particular case, we're looking at a gold candle developing right here in the pre-market. Yeah. Expand that back up, and you can see where we're at. Now, quadruple witching hour, that could produce some significant volatility, and with the number of positive extreme retrace capabilities within here, it'll be interesting. We've got a huge reduction in range, so and we're at highs for the market. And interestingly enough, this goes back to what many years ago, me talking about the quote-unquote peace dividend and eventual move to the S&P 3000. We've been talking about it for, well, every time we hit each of the different milestones, and it seemed ridiculous at the time, but now that we're here, not so ridiculous anymore, is it? And it's just a multiple factor of understanding how the market values devaluations and that, and some people don't take that into account when you know a currency is, and with interest rate rises and this kind of situation, it rebalances to take into account that discounting effect of inflation over time. And I know that's more than you need to know when we're talking about trading with our signals in between, but it's worth pointing out, just like pointing out gold above 50% and those moves to the highs. It is what it is. Might as well take advantage of knowing it versus having to guess. As always, though, I will keep putting up various charts, and if I make the adjustments on that Dealcon paint and that, I will certainly be sending it out in between. It'll be pretty self-explanatory because it was just going to change the colors before when you start to see the yellow candles. I don't think we have one on this view right here. Let's see if we can get one. Yeah, right here where you start to see the various yellow candles. It's going to incorporate a lot more of the setups with the ABM resets and that, and so we'll see areas where it stays red, the whole time versus flipping to green for just the little runs. It's always a delicate situation because for some people, taking that move that's a few points from a like this 2900 that takes you up to 29,250, 23, 2-3 points. It depends on people's preferences for trading. I tend to like to look for the bigger point moves. I think it's much more profitable. Well, even if we take a look at like the Opus 2 and the 50K chart, it's been in this trade since what is that 2905, right at that algo resistance point that was established on the 5K chart, and it's been in this trade ever since. So that kind of situation, it turns out to be with lower win percentages, but much higher profit factors because you're able to use the ABM to trail and follow it. So it's a thought. Just like to throw those different things out. As always, trade well, and we'll talk again later.